We'll be going over IRS Schedule 1, Additional Income and Adjustments to Income. This tax form reports items of income and adjustments to income that do not fit on a taxpayer's Form 1040. So individual taxpayers will use this when they are reporting those additional items of income or adjustments to income. So this tax form has two parts. On part one, you'll enter various items of additional income that did not make their way into your Form 1040. You'll combine those items and then you'll put them on line 8 of your 1040. Part two contains all the adjustments to income. So each of these adjustments is basically an above the line tax deduction. They're also known as adjustments to AGI, adjustments to income, because all of these tax deductions will lower your adjusted gross income. So not only do you pay lower taxes, but a lower AGI has a ripple effect on other tax benefits. For example, if you deduct medical expenses on Schedule A, then you should know that only the part of your medical expenses that is greater than 7.5% of your AGI is eligible for an itemized deduction. So if you have an original AGI of $100,000, these adjustments to income lower that. If you're able to lower that to $90,000 of AGI, then your AGI floor is no longer $7,500, which would be 7.5% of the $100,000. Instead, your AGI floor is $6,750. So that additional $750 becomes a tax deduction on Schedule A as opposed to part of the floor that you have to exceed. So anytime you're able to claim adjustments to income, it is a much better tax benefit than a below the line deduction, which does not get captured on Schedule 1. So for the purpose of this video, I made standard $1,000 entries for each of these items of income or adjustments to income. And what I'll do is, as we go through each line item, I'll briefly discuss it. I'll mention what the instructions say about that particular item, and then I'll also give some information on where you can get additional detail if that is pertinent to your tax situation. You can find all of this information in our article, which we'll link to in the show notes, and I'll mention at the end of this video. So let's start at the top of the form with our hero, John Doe, his name and his social security number as they appear on the tax return. So line 1 would be taxable refunds, credits, or offsets of state and local income taxes. So if you're in a state where you paid state and local income tax and then you received a taxable refund, then you need to report that refund as an item of income if you itemize that deduction. So again, on Schedule A, let's imagine that you claimed $5,000 of state and local income tax and in a previous tax year. And then after that was filed, you received a refund for $1,000 from the state. Because you already took a tax deduction, you now have to claim that refund as an item of income. So you're reporting it on line 1. On line 2A and 2B, we're going to discuss alimony. So if you've never been divorced, this line will not apply to you. However, specifically about alimony, only alimony that was received as part of a divorce or separation agreement that was signed before December 31st, 2018 is considered taxable income. So the Tax Cuts and Jobs Act of 2017 revised the tax law to make sure that any pursuant or any future divorce agreements, the alimony is not taxable income to the person that's receiving it, nor is it a tax deduction to the person that is paying it. In this situation, John Doe has received $1,000 of alimony because his divorce was finalized in January of 2017, well before the change enacted by the Tax Cuts and Jobs Act took place. If you're a business owner, if you have Schedule C, and this is business income specifically to your practice as a sole proprietor, or if you operated a business by yourself without any kind of a structured entity like an S corporation or a partnership, then you would attach your Schedule C to your tax return, and you would enter your business income or your loss as you calculated it. I should mention there is a worksheet for line item 1, the state and local income tax refund worksheet. So you may need, if this is applicable to your situation, you may need to complete the tax refund worksheet to calculate the amount of your additional income because of this. So you can find that as well as all the other worksheets that I will mention in this article or in this video. You can find those in the form instructions on the IRS website. We've also printed screenshots in our article so that everything is in one location. In item 4, you may have sold or exchanged assets that were used in trade or business. And if you did, then you would be completing IRS Form 4797, and you would enter the gain or loss from the disposition of those items in line 4. If you have any reason to file Schedule E because of income or losses from rental real estate, royalty income, partnership income, S corporations, trusts, estate income, you're going to attach Schedule E, and you're going to report on line 5 the amount of income that you received. If you have farm income, you will complete Schedule F, and then you'll enter the farm income or loss in line 6. If you received unemployment compensation during the tax year, you'll receive a Form 1099-G showing in box 1 the total unemployment compensation that was paid to you in the tax year. This is the amount that you'll enter into line 7. Now, if you received an overpayment and you repaid any of it, then you can subtract the amount of the overpayment that you repaid from the total that you received, because your Form 1099 will only report a total amount dispersed. It will not reflect any payments, repayments of an overpayment. For example, if you were paid $50,000 in unemployment compensation, but you repaid $10,000 of it, then you need to subtract the $10,000 and enter $40,000, because your 1099-G will simply reflect the $50,000, which is factually incorrect. Now line 8, specifically lines 8A through 8Z, contain other lesser known items of income. Most of these items will probably not apply to the vast majority of taxpayers, but we will go through them line by line so that you know how to get more information on each particular item. Net operating loss in line 8A. So if you had a net operating loss deduction from a prior year, you'll enter that amount in Schedule 1 right here, and you'll see that it's in parentheses as a negative number. So this is actually subtracted from all of your other items of income. So as you see in this tax form, any item that's marked in parentheses is a negative item, and you will not add that. You'll subtract it from your items of additional income. So if you need more information on net operating losses, you can see IRS Publication 536 for more details. Line 8B contains gambling income. So you would enter any gambling winnings, which might consist of lotteries, raffles, lump sum payment from if you won the lottery and you decided to sell your rights to receive future payments. Like all of that is considered gambling income. So you should receive a form W2G, or which you would attach if any federal income tax was withheld. But you do need to enter your gambling income. You can deduct gambling losses up to the amount of your gambling income, but that would be under Schedule A as an itemized deduction. So if you don't itemize your deductions, then you cannot deduct any gambling losses. Line 8C contains cancellation of debt. So if you had outstanding debt that was then canceled, for example, during the Great Recession, a lot of people received debt cancellation on mortgages that were not sustainable. You would receive Form 1099-C. This canceled debt would be reflected in Box 2 of that form. You may be able to exclude some or all of that income from taxation. You would need to see IRS Publication 4681, or you can go to the IRS website and type in canceled debt or foreclosure in the search box. And then you will see what you can do to determine how much debt cancellation you need to include in income. Line 8D contains any foreign earned income exclusion from IRS Form 2555. So you would enter the line, if you completed this tax form to exclude foreign earned income or the housing exclusion, you would enter the amount of that from line 45 of your Form 2555. You'll enter this as a negative number because it's an exclusion from income. Line 8E, if you receive taxable distributions from an Archer MSA or a Medicare Advantage MSA, you need to report that income on line 8E and so that you can calculate the tax from it. So on line 8E, you would enter the total of the amounts from your IRS Form 8853, specifically lines 8, 12, and 26. IRS Publication 969 contains additional details. For line 8F, you'll include any taxable distributions from a health savings account. So if you completed IRS Form 8889 and you see that there's any taxable income on lines 16 or 20, you'll enter the total of those lines in 8F. Line 8G, if you received Alaska Permanent Fund dividends during the tax year, you'll include them in line 8G. In line 8H, you'll include any jury duty pay that you received for time that you spent doing jury duty. Now, if you have an employer that you have to repay your jury duty because they continue to pay you your normal salary while you're serving on jury duty, you can exclude that. You can actually deduct that back out down on line 24A. So if you feel like you're getting double taxed on income that you never actually received because you gave it back to your employer, you report it here on line 8H, and then you subtract it back out on line 24A, and it becomes a wash. So I'll point out instances where you have to report an item of income, but where you also have the opportunity to possibly deduct that item. Prizes and awards on line 8I. So you'll enter any prizes and awards that you may have won during the year. except for any prize money that you earned from the U.S. Olympic Committee or any Olympic and Paralympic medals that you received. Those items are on line 8M instead of line 8I. If you engaged in activity or if you received income from activity but you weren't engaged in for-profit income, then you'll need to report it here. IRS publication 535 contains details, but for example, the IRS has very specific guidance on what an activity might be considered engaged in profit versus not engaged for profit. And a common example might be something like a hobby. So you can't deduct hobby losses on your tax return if your hobby is specifically not characteristic of a for-profit activity. And the IRS has additional guidance in publication 535 to help taxpayers determine whether or not their activity is engaged in for-profit or not. A common example might be horse racing or race horses. So there are lots of racehorse owners that happen to engage in horse racing for profit. There also happen to be a lot of people that own horses that may enter some of those horses in a race, but they're not engaged in that activity for profit. That's simply a hobby for them. And the IRS has clear definitions of how to make that distinction in publication 535. So if your activity produces income, but you're not engaged in for-profit, you would enter that income on line 8J. If you exercise stock options during the tax year and you did not report them on line 1H of your 1040, you would report anything else in line 8K here. Rental property, if you were engaged in the rental property for profit, but you're not in the business of renting personal property, then you would report the income here. So if you happen to have if you have a rental house with bicycles that you lease to temporary tenants because they like taking long bike rides on the beach, you can say that you earned money from those rentals, but you aren't in the bicycle rental business. And so you would claim any income from that here on line 8L. If you had any expenses, you would be able to deduct any expenses on line 24B. In line 8M, you're going to report the value of any Olympic and Paralympic medals, any U.S. Olympic Committee prize money here. However, if your adjusted gross income is $1 million or less, then these amounts are non-taxable to you. So you would include that income here, and then you would subtract it on line 24C, and that's how you would not pay tax on that income. So if you're an Olympic athlete, but you're not a professional athlete earning millions of dollars a year, then you're probably not going to be taxed on any earnings that you receive by participating in the Olympics. In line 8N, you're going to include any Section 951A income. So Section 951 specifically requires that a U.S. shareholder of a controlled foreign corporation include its pro rata share of the corporation's subpart F income and the amount determined under Section 956. So, if that sounds like gibberish to you, it probably doesn't apply to your situation. However, if you happen to be a U.S. shareholder of a controlled foreign corporation, then you would include your Section 951A income here. And line 8O is section 951A, subsection A inclusion, which is a different part of the tax code. This part specifically requires a U.S. shareholder of a controlled foreign corporation to include its global intangible low taxed income, also known as GILTI. You would report this in line O instead of line N. Again, if this sounds like gibberish, it probably does not apply to you. In line 8P, this is section 461L, excess business loss adjustment. If you had to complete IRS form 461, you'll enter the line 16 amount in line 8P. If you have an ABLE account, which a lot of people with special needs trusts have for primarily tax purposes or income eligibility for certain programs, certain purposes, then you might have an ABLE account. If you took taxable distributions, which might be taxable if they're more than the designated beneficiary's qualified disability expenses and they weren't a rollover, then you would include those taxable distributions in 8Q. You can see the instructions for IRS Form 5329 for more detail, but that's where you report certain items with additional tax implications. In line 8R, you're going to report any scholarship and fellowship grants that were not reported on Form W-2. If you're a degree candidate, you're only going to include the amounts that you used for expenses not counting tuition or course-related expenses. So if you receive scholarship and fellowship grants for room and board or travel, you would report those items in line 8R. In line 8S, you'll include the non-taxable amount of Medicaid waiver payments included on your Form 1040, either line 1A or 1D. So if you received Medicaid waiver payments because you're caring for someone that's living in your home, it might not be taxable. It depends on what your Form W-2 says. So if non-taxable payments were reported to you in box 1, then you would report that amount on line 1A. If you didn't receive a Form W-2 for non-taxable payments, or you received non-taxable payments that you did not report on line 1A, and you choose to include them in earned income because of a tax credit or other tax benefits, then you would put that line item in 1D of your tax return so that it counts as taxable income. So either 1A or 1D items would go here. In line 8T, you're going to enter any amounts that you might have received as a pension or an annuity from either a non-qualified deferred compensation plan or a non-governmental Section 457 plan. This would be shown in box 11 of your Form W-2. If you received an amount but the box 11 is blank, you might need to contact your employer or the payer to determine the amount that you received. 8U, if you were incarcerated, then you would enter any income items that you for wages earned while you were incarceration or incarcerated. I apologize. In line 8Z, you're going to combine other items of income. You're going to list the type and how much in 8Z. Examples of other types of income might be reimbursements of other amounts that you received for deductions in a prior tax year. So if you claimed medical expenses because you had to pay out of pocket, but then it got reimbursed to you, and you claim those expenses on Schedule A, then you would have to back that out by reporting it here on line 8Z. Reemployment trade adjustment assistance payments, dividends on insurance policies if they exceed the total of what you paid into the contract, recapture of a charitable contribution deduction if the charitable organization disposes of the property you gave them within 3 years, taxable distributions from a college 529 plan or a Coverdell savings account, the taxable part of any disaster relief payments. You should not include any of the following items: gifts and bequests, life insurance proceeds, unless except for certain employer-owned life insurance contracts, payments that you receive to help repay your loan under the FHA Hardest Hit Fund or the Homeowner Assistance Fund, child support payments, alimony received pursuant to a divorce or a separation agreement that was signed after December 31st, 2018. All of those items would be considered not taxable income, and you don't report them in line 8Z. So in line 9, we're going to combine all of the line items in line 8. We come up with $16,000, and then in line 10, we're going to combine items 1 through 7 plus line 9. We're going to enter that here and on line 8 of your tax return. So that completes the part on reporting additional income. We're now going to go to part 2, where we report adjustments to income. So let's start with line 11 and educator expenses. If you are an eligible educator, you can deduct up to $300 of qualified expenses that you paid in the tax year. So right off the bat, this is incorrect here, because even if John Doe were filing as a married taxpayer, he and his spouse could only claim $300 each, and they each would have had to spend the money to claim it. So if John spent $500 but his wife only spent $100, then John would claim $300, his wife would claim $1. So this item is factually wrong, but for the purpose of this video, it's simply there for illustration. Now, if you are claiming qualified expenses, you need to understand what those qualified expenses are, because there are very specific definitions. They are ordinary and necessary expenses that were paid for either professional development that you took related to the curriculum you teach or to your students, or in connection with books, supplies, and equipment and other materials used in the classroom. And for this purpose, computer equipment, IT equipment, software, and services are all included as part of those qualified expenses. Ordinary and necessary expenses have a very specific IRS definition as well. An ordinary expense is one that is common and accepted in your educational field. A necessary expense is one that is helpful and appropriate for your profession as an educator. But an expense does not need to be required by your school or your school district to be considered a necessary expense. So if you buy something that you believe you need and it's commonly accepted for teachers, in a similar arrangement to have purchased the same thing, then it does not matter if you were required to buy it out of pocket. The fact that it's considered to be an ordinary item and a necessary item within your profession is sufficient for tax purposes. You must also reduce any qualified expenses by the following amounts. So if you excluded any Series EE or I savings bonds, you would file IRS Form 8815, and then you would back that out of the total, as well as any non-taxable qualified tuition program earnings or distributions, any non-taxable distribution of a Coverdell ESA, or any reimbursements that were not reported to you on Box 1 of your Form W-2. So you can't claim a deduction for expenses if you already got reimbursed for them and that reimbursement was not taxable income. In line 12, If you are a performing artist, if you are a reservist in the armed forces traveling more than 100 miles to your drilling location or your place of duty, or if you are a fee basis government official, then you can claim certain business expenses on IRS Form 2106. And when you've completed that form, you'll enter the result here in line 12. If you participate in a health savings account and you made a qualifying deduction contribution to your account, you'll report it in IRS Form 8889, and then you'll take the deduction here on line 13. Moving expenses. Moving expenses used to be an eligible expense for everyone. Now it's limited to certain members of the armed forces. Specifically, if you're moving due to permanent change of station or PCS orders and you are on active duty orders, then you would complete IRS Form 3903 and you would attach that to this to your tax return, and then you would enter the deduction here on line 14. If you were self-employed, you have to pay self-employment tax as both. Basically, you're paying both sides of the FICA responsibility. So as an employee earning a W-2 income, you pay 7.65% of your compensation to Social Security and Medicare. When you're the employer, you're paying the 7.65% as your own employee. You're also paying the 7.65% as the employer. However, the employer portion is tax deductible on Schedule E. So you would complete Schedule E, and then you would enter the deductible part from line 13 right here onto line 15. If you made contributions to a self-employed SEP, simple, or another qualified plan like a solo 401k, you would enter that contribution here in line 16. If you were self-employed and you had health insurance, you might be able to deduct the amount that you paid for health insurance, not only for yourself, but for your spouse and your dependents. It can cover a child who is under the age of 27 at the end of the tax year, even though that child was no longer your dependent. However, one of the following statements must be true. 1. You were self-employed and you had a net profit for the year as reported on Schedule C or Schedule F. 2. You were a partner with net earnings from self-employment. 3. You used one of the optional methods to figure your net earnings from self-employment on Schedule SE. Or 4. You received wages in 2022 from an S corporation in which you were more than 2% shareholder. So there is a self-employed health insurance deduction worksheet that you need to complete. You can find that in the form instructions or in our article, but you'll need to complete that worksheet to determine the amount of your deduction. In line 18, if you had a tax penalty on the early withdrawal of savings, then if you had a penalty on the early withdrawal of savings, then you would see that on your Form 1099 INT or your Form 1099 OID. You can deduct that amount here on line 18. For line 19A, B, and C, this is the deduction for alimony paid pursuant to a divorce. Again, that divorce must have been finalized or the separation agreement must have been entered into before December 31st, 2018, on or before December 31st. So in 19A, you're going to enter the amount of alimony that you paid. In 19B, you're going to enter the Social Security number of your former spouse to whom you paid alimony. And in this case, John Doe, he's receiving alimony from one spouse and he's paying it to a previous spouse that he divorced back in 2000. In line 20, you may be able to deduct IRA contributions, but there are a couple of nuances you should know. You can choose to deduct a contribution, but if you decide not to or if you're not eligible to deduct that because because of certain income limits, then you would report your non-deductible contribution on IRS Form 8606. You would use the IRA deduction worksheet to calculate the amount of your deduction, but you need to take a couple of things into consideration before you start the worksheet. You cannot deduct contributions to a Roth IRA. If you're filing a joint return and you or your spouse made both traditional IRA contributions and Roth IRA contributions, you're going to need to refer to IRS Publication 590-A to calculate the amount, not the worksheet that's enclosed in the Schedule 1 instructions. If you made contributions in the tax year for deduction on the previous tax year's tax return, you cannot rededuct that contribution. Each contribution is eligible for exactly 1 year of a deduction. For example, if you made a deduction before the tax filing deadline in 2022, say on March 30th, but that was for your 2021 tax return and you already deducted it, you cannot then deduct that on your 2022 tax return because that applied to your 2021 tax return. If you received income from a deferred compensation plan that's included in Form W-2, do not include that income in your worksheet when you complete it. You must file a joint tax return to deduct contributions to your spouse's IRA. You must not include rollovers in your IRA deduction. You can also not include trustee fees, and you cannot include any repayments of qualified reservist distributions. And if you were covered by a retirement plan, you may be subject to certain income limitations. If all of these pass, then you can complete the worksheet to calculate the amount of your tax deduction. And you can find that again in the form instructions or in our article where we go into a little bit more depth. In line 21, this is the student loan interest deduction, which you can only take if you paid interest in the tax year on a qualified student loan. If your filing status is any status except for married filing separately, and if your AGI is less than $85,000 for single head of household and qualifying spouse taxpayers, or $175,000 for married taxpayers filing a joint return. Now, this is a modified adjusted gross income, so you will need to complete the student loan interest deduction worksheet to determine whether or not you qualify for that deduction. And again, you can find that in our article as well. A qualified student loan, by the way, is a student loan that you took out to pay the qualified higher education expenses for either yourself or your spouse, anyone who is a dependent of yours when you first took the loan, or anyone that you could have claimed as a dependent except for certain circumstances, namely that their income was too high for you to claim them as a dependent, they filed a joint return, or if you could be claimed as a dependent on someone else's tax return. Line 22, you'll leave that blank as the IRS has set that aside for future use. If you made an Archer MSA contribution, then you'll need to refer to the instructions for IRS Form 8853 to determine your deduction. Now, in line 24, we have other adjustments similar to the line 8 items of income. So in line 24A, you would enter any jury duty pay that you repaid to your employer. In line 24B, if you incurred any deductible expenses because you rented out personal property, then that income was reported on line 8L, then you would include those expenses here. For line 24C, you would include the non-taxable amount of any Olympic, Paralympic medals, and then U.S. Olympic prize money. If you participated in a reforestation project, then you can claim certain amortization and expenses. You would need to refer to IRS publication 535 for more detail. If you repaid supplemental unemployment benefits under the Trade Act of 1974, you would enter that repayment here. If you participated in a 501c18D pension plan, you would enter that in 24F. Contributions by certain chaplains to Section 403B plans would go into 24G. Attorney fees and court costs for any actions involving certain unlawful discrimination claims, you would enter that in line 24H up to the amount of gross income from those actions. So if you earned income from a unlawful discrimination claim, you can only claim your attorney fees and court costs up to the amount of recovery. So if your claim includes attorney fees, you're going to get paid extra, and then this is where you would deduct the cost of those attorney fees. And then that way, the rest of the reward money is simply taxed on its own merit. Line 24I, these would be for attorney fees and court costs that you paid in connection with an award from the IRS for tax law violations. So if you earned a whistleblower award, then you would claim a tax deduction for the attorney fees and court costs that you incurred. If you completed IRS Form 2555, this is the foreign earned income exclusion, you would claim your housing deduction on 24J. For 24K, if you had Section 67E expenses, then you would enter any excess deduction from Schedule K1 on your Form 1041. Specifically, this is referring to states and trusts. And then in line 24Z, you would enter any other adjustments that were not reported elsewhere. So in line 25, you'll total all of the line 24 items. We got $12,000. And then for line 26, we'll combine that with all of these items from line 11 to line 23. So these are your total adjustments to income. If you're filing IRS Form 1040 or 1040 SR, you would enter these items on line 10. If you're filing IRS Form 1040 NR, then they would go on line 10A. That's all we have for this video. It's pretty comprehensive, but if you want to go into more depth, or if you want to slow this down, we've written an article that contains this in much more detail. And it also contains links to other articles that we've written on forms such as IRS Form 2555, 8889, 3903, and others. So if you want to go to our article, you might be able to get more detail. Simply hit the link in the show notes or go to our website. If you go to teachmepersonalfinance.com and type in IRS Schedule 1, you'll see our article. If you like our articles, please subscribe to our newsletter. And if you like our videos, please subscribe to our YouTube channel. And if you have any questions or comments, please post them in the comment section. Thank you very much and have a great day.